got 60 left. So these things are coming, but you gotta be patient. Now we're gonna get some deals done pretty soon. The president will decide when he announces it, because remember, I'm his commerce secretary, I do the work, but the boss, and you know the boss is.
Yo, I'm telling you guys, not trading today is going to make me the happiest man of all time. Yesterday, I was pretty upset about missing that trade by just a few points. Today, I have zero issue not trading. And so I'm letting you guys know this in advance. I made that promise last Friday and I'm sticking to it. Whatever you guys decide to do, if you're down for the week, make sure that you're reducing your risk so you don't dig yourself a deeper hole. And if you're up for the week, try to set yourself a limit of how much of that money you're willing to give back today. That way you're not giving back more than you intend or not blowing a bigger hole in your account. All right. So whether you're up or down or neutral, make the right decisions today on a Friday. My decision based on my trading plan and results is to stay out today. But I'm still going to paper trade and kind of mess around here. And I'll let you guys know what I'm seeing along the way.
Well, to anybody in the world.
I do.
This is his deal to make.
But I'm told.
And his deal to do.
No, I appreciate that.
Yes, that was on Fox Business, but I wanted to play that clip because as we've been trying to report on the Trump administration's ongoing trade war, we've tried to give kind of the best possible perspective, the best put the Trump administration's argument in the best possible light so that people can agree with it or disagree with it. And I've had a really hard time figuring out what it is. I don't exactly know what they're trying to accomplish. And some of your writing has been really helpful in laying out what possibly could be driving some of what the thinking is behind the Trump administration's kind of reorganizing of the world economy. What, at this point in time, what do you think the Trump administration is trying to accomplish?
Two basic things. The first thing they want to do is they want to substantially devalue the dollar, while simultaneously, and that may sound like a paradox, but I don't believe it is, maintaining the exorbitant privilege, the so-called exorbitant privilege of the dollar, maintaining its hegemonic presence in the world economy. That's one of the, possibly the most significant goal. The second thing they're trying to do is essentially tie together the extent to which the Trump administration is going to assault its allies and foes with Trump, with Trump's tariffs, to tie this in to the extent to which tariffs are going to be used. So use tariffs in order to enhance the penetration of the American military industrial complex in other people's economies, and to calibrate that penetration by means of the tariffs. But the first task, which I mentioned, seems to be, judging by what Scott Bessent is saying, what Stephen Miran are saying, it seems to me the number one priority.
It seems to be working, right? And what would be the consequence if they do successfully devalue the dollar but maintain the hegemonic presence?
And can I also say, Yanis, especially in the context of Trump pulling back originally because of what he saw in the bond market, I think he said people were getting, quote, a little yippy. How does all of this fit together?
Well, there's no doubt that he got a scare. He felt that the Liz Truss moment may be coming his way, undoubtedly. So he stepped back, but he's going to step forward again in his usual shuffle. But allow me to just by the way, lest I am misunderstood, I'm not supporting the Trumpian project. But I do believe that those of us who are politically opposed to it, we have a duty to understand it and not to dismiss them as a bunch of Neanderthals, which is what most of the liberal establishment, to their detriment, I have to add, are doing. So, look, if you heard Scott Bessent at the IMF the other day, he was really very clear. He talked about the Bretton Woods institutions. He talked about the Nixon shock in 1971. And essentially what he was telling his audience was, and it's not an irrational perspective to present to the world. What he was saying was, look, folks, ever since we became a deficit country at the end of the 1960s, by 1970, America was a deficit country. We achieved something quite spectacular. We managed to grow our hegemonic power in proportion to our trade deficit and our budget deficit. That has never happened before. No empire has managed to grow its power while going into the red. And the United States managed to do it at the expense of the American working class, at the expense of a very substantial portion of the American middle class, but we did it. And then he adds, I don't believe we can carry on doing it, because there is a limit beyond which trade deficits are not sustainable anymore. And you see, the success of the Nixon administration, the Carter administration, the Reagan administration, and so on and so forth, was that they managed to make other people's capitalists pay for the American deficits in a manner which violently enriched the American rentier class. But that gave rise, in the end, to an incongruity. If you look at the dollar world, the world out there, the economic sphere that is denominated in dollars, it is gigantic, and it has been growing since the 1970s. But the manufacturing capacity, the real material economy of the United States, on which this dollar world is parasitic, has been shrinking and shrinking and shrinking. So you have a huge parasite and a tiny little organism on which the big parasite is being parasitic to. So their concern is that this is becoming completely disproportional. They need to shrink the dollar world and increase the extent to which the American economy can manufacture stuff. This is what they want. So from their perspective, a devaluation of the dollar by around 30%, which is ballpark what they want, will restore something like an equilibrium, not an equilibrium, but it will take the whole gamut closer to an equilibrium. But they're very, very worried that this devaluation should not be allowed to diminish the exorbitant privilege of the dollar. And this is why they're playing hardball with China. This is why they're playing hardball with the Japanese. They're telling the Japanese, sell a chunk of your $1.2 trillion of savings, but don't buy Japanese yen, do not buy the euro, do not buy the Chinese yuan. We will tell you what to buy. So tariffs are, in that context, in the context of Besant, they are a sideshow. They may be very high up the list of priorities of the great Donald, but not his economic team. His economic team is far more interested in what they call the rebalancing of the dollar paper money trade and the actual productive capacities of the United States.
And let's put C1 on the screen. So this is from Arnaud Bertrand, who points out that China, Japan, South Korea, and the countries of ASEAN just issued a joint statement in which they take a unified stance against, quote, escalating trade protectionism, clear reference to Trump's tariffs. And I want to ask Yanis, now that we've sort of established, I think very accurately, what the administration's goal is, and that's hazy in a lot of corners of the media where they have this distorted idea of what the administration is actually trying to do. Are they, how would you say that they're doing towards their own goal? If that is their own goal, how is the progress? Is it working, let's say, on their own terms?
Allow me to be frank, it is far too early to know. Imagine we had the time machine and we went back to, let's say, October 1971, a couple of months after the Nixon shock. It would have been impossible to predict whether the Nixon shock would have worked, because it took a decade for the Nixon shock to be implemented fully, which means that the Trump administration, this Trump administration, cannot.
Can you explain to us what the Nixon shock is?
In 1971, 15th of August, those old enough can remember that because it was a shocking day. It was the day when effectively Nixon blew up the international monetary system that the United States had painstakingly put together at the Bretton Woods Conference in 1944. The golden age of American capitalism, of global capitalism, which was the 1950s and 60s, as we all know and remember. It was predicated, it was built on that monetary system. It was a remarkable system, come to think of it. It had, the anchor was the dollar. People say that it was the gold because indeed the United States guaranteed anyone with $35 an ounce of gold from Fort Knox. But that was a sideshow, it was more for show. The reality was that it was a monetary system predicated on the United States dollar, which was in fixed exchange rates, completely pegged to every other currency in Europe and in Japan, and the Japanese yen, for years, for decades. There were no fluctuations in exchange rates. Interest rates were stuck at around 4.5%, plus or minus 0.1, 0.2%. It was wonderfully boring, the whole financial establishment. Imagine, you never had to check the exchange rates or interest rates because for decades they were the same. And it was a golden era because what was the essence of the Bretton Woods system? It was that the United States exited the Second World War as the only creditor nation, as the only surplus nation, the only country with a large, gigantic trade surplus. It was the only country that was not in ashes after the Second World War. And the idea was to maintain those surpluses. The American administration would do whatever it took in order to dollarize Europe and Japan, essentially taking part of its surpluses, sending it to Europe and to Japan, either in the form of aid or loans, private loans, public loans, so that the Europeans and the Japanese would have enough dollars to purchase the American exports. And this worked brilliantly until the United States no longer had the surplus. And with typical bravado, Richard Nixon, it wasn't Nixon himself, there were some very interesting people around him. The Nixon team comprised Henry Kissinger, who was the National Security Advisor at the time before he became the Secretary of State. It was John Connally, the former Texas governor, Democrat, who absconded and joined the Nixon administration and became the Treasury Secretary.
Shot next to Kennedy.
Yes, indeed. He was in the car when JFK was shot. And primarily, a young man called Paul Volcker, that no one knew at the time, who was the real brains of the Nixon shock. But the reason I'm mentioning that, and thank you for giving me the opportunity to say that, is the Nixon shock took place on the 15th of August, 1971. It was major. Nixon sent Connally, his Treasury Secretary, to the Europeans, who were pulling their hair out because the dollar devalued so fast, and essentially inflation and unemployment was coming the way of the Europeans as a result of that move by Nixon. And Connally very arrogantly and aggressively looked at them with cynicism, I would say, and said to them, guys, the dollar is our currency, but from today, it is your problem. So when people say that, what Trump did is unprecedented, and never before has America treated its allies so badly, that's rubbish. They did it in 1971, and they kept doing it for years and years. And indeed, Paul Volcker, before he was appointed by Carter, chairman of the Fed, a couple of months before that, in 1987, 1978, if I remember correctly, he gave a speech at the University of Warwick in England, which was remarkable. Because there he outlined the plan. And the plan was, and I am quoting here verbatim because it's etched in my mind, this speech of his. He said, the United States has opted, for reasons of its own national interest, for the controlled disintegration of the world economy. Does this remind you of anything? This is 1978, the controlled disintegration, and the Japanese and the Europeans were pulling their hair out. So, but you see, it took 10 years. Because it wasn't just the Nixon shock in 1971, it was the Carter administration that continued that by appointing that same man, Paul Volcker, to be the head of the Fed. And then Reagan continued it, and then Bush continued it, and Clinton continued it. So whether, this is my excuse for saying it's too early to judge whether the Trump shock is going to work, because the question is there going to be this continuity in implementing the basic idea, which people like Scott Bessent are outlining?
So I often also fall into the trap of thinking that these are Neanderthals that are organizing this policy, but I agree and follow along with their analysis all the way up until basically implementation. When it comes to the implementation, it feels like there's no, and therefore this is how it's going to work out. And maybe I'm missing this as well, but they are, effectively, devaluing the dollar, creating conditions that could, create some manufacturing turnaround without having done the work of giving us the foundation on which we could build a manufacturing capacity. Like you still need things and people in order to feed that. Economics by itself is just magic. Like it can't, by magic, it can't just create things out of nothing. And if China tells us, well, we're not sending you any semiconductors, we're not sending you any of the magnets, you're not going to get any of the refined rare earths that your manufacturing capacity needs, we're going to have a collapse in our manufacturing base relative to last year. And then the politics are going to reverse and end this entire experiment before it even gets out of the lab. And that would then answer your question of whether it's working. Because in order for it to work, you need political continuity, and you can't have political continuity, I wouldn't think, if you get a significant recession and you don't see any green shoots of manufacturing out of it. So what am I missing there? Like, what does Bessent see as the potential for us to revitalize our manufacturing capacity while simultaneously cutting ourselves off from trade?
And Giannis, I'll just add, they're now saying the tax cut bill that Trump hopes to pass over the summer will include like 100% write-offs on building expenses,
Okay, well, that's
equipment,
something of an answer.
retroactive to January 20th. So I don't know if how you would react to all of that. Yeah.
Well, I'll start with the last point you made about the tax cuts. We keep forgetting that Trump's shotgun has two barrels. One of them contained the tariffs, the second one, the tax cuts. The second has not been fired yet. And I think this is a very important part of their plan for attracting foreign capital, particular German capital or Japanese capital or Taiwanese capital into the United States. But yes, look, you have every reason to be despondent about the lack of preparation, the chaotic nature of all these announcements, the very sloppy language that Donald Trump in particular uses. Reciprocal tariffs. I think there's no reciprocity in what he's doing. He's just going all out with gigantic tariffs in proportion to the trade deficit that the United States has vis-a-vis particular countries. So yes, I mean, it is a bit, you will excuse my unscientific terms, a bit of a shit show. But then again, I have to take you back to 1971. It was exactly that in 1970. Richard Nixon was not the most coherent for reasonable people in the world, right? He was probably one of the worst ones. He also, on the 15th of August, what we tend to forget is that not only did he uncouple the United States dollar from gold and spearheaded a massive devaluation of the dollar, but he also did something else. He introduced tariffs, 10% tariffs, immediately, the same day. And then he took those back 3 months later. So that's why I keep insisting that we've seen this play before. And we have seen the chaos, and we have seen how remarkably it worked, not on behalf of the working class of the United States, of the middle class of the United States. They were destroyed. I mean, as you know, in your country, hourly real wages are still below the level that they used to be at in 1973. When Trump talks about the carnage in the heartlands of the United States, he's completely right. Of course, he uses this to exploit the people who vote for him and trust him. And I think they trust him in a manner which they will live to regret one at some point. But we've seen all this before. Now,
I told you guys this the other day. I'm starting to lean closer to that camp. The more I'm looking at these policies, it's not about the policies themselves, because I can rationalize why each one of them is going to be successful or not, but it's really more the implementation and how the Trump administration is responding to questions when people ask them about their end goal with something. So a lot of the policies just seem to end up leading to higher costs for consumers, tax cuts for major corporations, and it's going to end up being higher taxes eventually for consumers, like higher prices with inflation, and then higher taxes later, because Doge spent 100 days trying to find all this, fraud and abuse. And even on their website, they're listing about $180 billion, not $2 trillion. But they just added $150 billion to the defense budget in the most recent bill they just signed, or that's going to get pushed through. And so it's like all the work that they've done is just completely out the window. They didn't look at the Pentagon and see where the real waste is going. And then we just added all the money that we saved, just threw it on top of the war machine. And so I just don't understand this administration claiming that like they're doing this for the MAGA base, they're doing this for the country and for the people of the country. Seems like most of the policies, even in the long term, aren't really, they're not looking good. But just like Giannis said, it's the benefit of the doubt and it's all about patience. So that's why he's spoken like a true economist and an ex-finance minister. Shit takes time. And even though he disagrees with Trump and he's politically against these decisions, he's going to give him the space and the time to, you know, like to honestly assess these things versus just kind of hating. And so that's why I kind of respect Giannis here. Let's see what he has to say at the very end, and then we're gonna jump to Scott Bessent at the IMF giving a speech.
Let's get to the point. Is this going to work or not?
And just an announcement, I already made this earlier. Number one, click the link in the description, register for the masterclass and or the live trading webinar next Wednesday. Second, I'm not trading today. I made a promise last Friday on the stream, no trading on Fridays, even though I'm going to be here on the streams. So I just wanted to go ahead and put that out there. When I'm not in the markets, like when I'm not in a trade and I don't have money on the line, take everything I say with a grain of salt. If someone doesn't have skin in the game, they don't have that same level of something to lose for just like taking one side or another. So if I'm not trading today, then I don't have money on the line. That means the bias is just more of a fun sort of game that I'm playing. So you should kind of take everything I say with that context in mind.
Well, I don't think it's going to work. I think that it's not going to work from the perspective of the MAGA base who put their trust in Trump to bring back a sufficient number of jobs and a quality of jobs that
which I think he will. This is the one area where I don't think we're going to have a problem. Jobs is Trump's specialty.
Would somehow restore their capacity to dream the American dream. And the reason is not that capital is not going to rush to the United States. I have no doubt that it is already rushing into the United States. I've spoken to people in Germany, I've spoken to people in France, I've spoken to people in Japan, and they are increasing very substantially the amount of investment they're going to be putting into the United States. That is not the problem. Capital is flowing already in the United States. But I don't think the number of jobs is going to be proportional to the amount of capital, because if you think about, take Apple, for instance. When Apple introduced manufacturing again in the United States some years ago, they built that factory that makes the MacBook, their laptops, the MacBook Pros, in somewhere near Austin, Texas. Well, the number of jobs was minuscule because of automation.
Mhm.
So a lot of the new manufacturing capacity is going to create a jobless surge. So this is problem number one. But allow me to tell you what I think is the real danger that Trump should be thinking about, especially during the night, keeping him awake. If I were him, I would worry about success. Because if he is successful in bringing back manufacturing to the United States to the extent that he says that he will, which I don't think he will, but let's say that he does, then what happens? Then the trade deficit of the United States shrinks. But the trade deficit of the United States is the flip side of the massive rents extracted from the global economy by American rentiers. Because come to think of it, it is the American trade deficit which keeps German factories churning, Japanese factories, and Chinese factories. And it is the dollars that these capitalists in Germany, Japan, and in China collect, which they accumulate, and then they bring it back to, or send it to New York, to Wall Street, to be recycled in the form of US government debt, treasuries, some equities, and a lot of real estate. So the reason why financial markets have been doing so well over the last 40 years or so, the reason why realtors like Trump have been amassing these gigantic rents for the last 40 years is the American trade deficit. So what happens when he eliminates it, if he succeeds in eliminating it? Well, he's going to have some really very cross rentiers, financiers, and realtors. His tribe are going to be livid with him. Can he sustain that, or will he choose to betray the working class that voted
He's kind of talking about like the majority of the high net worth real estate in America is owned by foreign investors, like mainly Russian and Chinese money that like just don't know where it comes from. And so even though you see all these like home tour videos of $50 million houses and you see ball players and stuff like in the tour videos and you see actors, whatever, it's some Russian oligarch somewhere that like makes like nuts and bolts for the army helmets or some shit. It's like a billionaire that owns this stuff. And so what he's talking about is when the value of the dollar is weaker compared to other currencies, their currency goes further. So they can take their Russian money and actually it goes a long way here. Versus the other way around, if the currency is too strong or their currency is forced to be weak, then it ruins their purchasing power in the United States. And he's saying that's going to impact his, like Trump's boys are going to get impacted by this. I think interest rates, because those are cash buyers, by the way. So the interest rates really impact folks that are taking on mortgages, even if it's a commercial, like a commercial debt that you're going to take on from the bank. Some of these folks that he's talking about, these are the gold card holders, basically. The folks are going to pay $1 million to get a green card to be able to do business here. So they'll pay it regardless.
For him. I suspect it will be the latter.
And so, yeah, so what would that look like? So let's say the rentier class is now getting pinched.
So we have 3 minutes until the market opens. Initial rejection here. I think we're going to hit TP1 and wick right at the market open. So I would either set a hard take profit or protect the trade, because I think if this thing comes down to TP1, I think it's going to end up wicking all the way back up at the market open. So you have to play this thing pretty smart. All right. Again, I'm not trading live money today. I'm paper trading this or sim trading this on TradingView just to kind of like, I don't know, we're tracking the market, so I might as well paper trade this. So yeah, 2 more minutes until the market opens. I think that's what we can expect. Make sure that you guys have your decision made prior to the candle moving. Don't wait for candles to form in order to like decide what you want to do. So like if it does hit the first take profit zone, what are you going to do? What is your plan? And then if it doesn't, if it just rejects and goes the other way, what is your plan? And so that way, whatever the market gives you, you still have a plan of action, whether it's close or close half or whatever it is. But don't wait until something happens and then react. Reactionary trading is where we all get trapped. All right, you want to respond to the information the market's giving you, not use emotions to sort of guide you one way or another.
And it's an incredible irony that it is a kingpin of the rentier class that, he's literally a real estate developer that is leading this operation that then pinches people like him. What then happens if you no longer have these dollars, flowing out to Germany?
All right, TP1 just got hit. So what it would look like is I'm going to open up the simulated trading panel here. Go ahead and close half. All right. Walk away with some profits, close half. And then as soon as we see the next pullback, that's when I'll move my stops to break even. All right.
German factories, Chinese factories, Japanese factories, and then recycled back into Wall Street and then circulated throughout the U.S. rentier class. Like what does happen? Like what do the factories do? What are the
See, Howard Lutnick speaks after.
I think we're gonna have a very good weekend.
After weekend talks?
I might, yeah, sure, depending on what Scott says. We Scott is doing certain countries and Howard's doing certain countries. I mean, I wish I had like 10 more of each. Then we could do them all at one time.
All right, joining me now is the aforementioned Howard, as in Commerce Secretary, Mr. Howard Lutnick, old friend. Howard, thank you for doing this. We appreciate it very much. Congratulations on the deal. That's point number one. And I just want to...
That's why we take partial profits. Put a 1 in the chat if you guys paid attention to this and like you consciously were aware of what just happened on this trade. I'm mostly speaking to the members on the Zoom. Like if we're watching this and we're studying this and it plays out, at least just let me know that you guys consciously just followed and tracked everything that happened. That way it's not just like random and you're kind of just like, I want everyone here to be able to follow along competently. Okay. And now it's patience time. Market just opened. We're 1 minute post market open. Obviously, we're getting those initial spikes. So here's the big picture. I have both the 30-minute time frame. So we have a kind of a 30-minute range. Towards the top of the range, we have sells. Towards the bottom of the range, we have buys. And then there's the smaller time frame trade here. The trade using our daily system. Okay. So let's continue to track this. After the next impulsive push, if there is one, that's when you'll move stops to break even, and then just let this thing ride from one zone to the next.
Ask you, I know we could go through lots and lots of details, but the thought occurred to me, in this deal, you've got market openings for agriculture and metals like steel and aluminum, and automobiles, for example. Doesn't this reduce the need for supply chains coming out of China? Okay, and maybe you're going to have other countries, we'll get to that too. But doesn't this reduce the need for those Chinese supply chains where they've been impossible and they lie and they cheat and they steal and they don't enforce phase one deal that we did 4 or 5 years ago? This British deal opens the door to different new supply.
Bro, how is Kudlow getting younger? And who let Kudlow rock this nice ass suit? Which one of his nephews got him dripped out like this? This guy looks like he's about to bribe me to vote for one of his politicians in the 1920s. This guy looks like he's about to go fight the Union.
Change, doesn't it, Howard?
That's not a Confederate joke. Okay, we're done with those. I'm talking about the Unions, like industrial era. Different.
It does a little bit. Remember, we had balanced trade with the UK. If when we do our deal with the European Union, that is top topic. Because remember, the European Union's got a $250 billion trade deficit with China, and they have a $235 billion trade surplus with us. So the Chinese just go through Europe to come at us, right? They come at us through Vietnam. You wouldn't think they come at us through Europe, but they do. But the British is really opening market, $5 billion of new opportunity for Americans to export to Britain, where we already had a balanced trade. And what we did is we helped them out, as you pointed out. We said, you know what? You can keep your auto industry. You can only go down to 10%. You can keep it. It's only 100,000 cars we import. And you know, we sell 16 million cars a year. So 100,000 is okay.
Are you handling the freight on the European Union? Because I know how hard that is. I was involved in that years ago. Obviously, Bob Lighthizer was our leader, but I was particularly involved in that stuff. They're impossible. And on top of everything else, they have a value-added tax. Are you handling the...
Yeah, it's starting to look like price is already filling this wick to the upside. So there's a very good chance it continues to fill up. Again, this is on the 5 minute. So this is the bigger picture. There's wicks to the downside, there's wicks to the upside. And even though, I mean, price is clearly forming higher lows. And so the momentum is still on the bullish side, but it can go either way. Right now, I'm trading two different things. There's the higher time frame 30-minute range and the 5 minute kind of like smaller little retest over here inside of the daily range. So this is the high of the day and the low of the day. And so we're just kind of trading the highs and the lows, selling at the top, buying at the bottoms. But there's a very good chance, just because price is already filling this wick to the upside, is going to continue to fill. And so it's always important, when in doubt, zoom out. So we fill this top side wick, then we have a sell zone waiting right above, about 100 points away.
freight on the EU?
I am. In fact, I do virtually all the countries. Scott is obviously focused on China, and he does a few Asian countries with me. But basically, I'm the driver of the template together with USTR, right, Ambassador Greer, but I'm the driver of it. That's why we got this deal done, because we were able to move on cars. We were able to move on airplane parts, right, commercial airplane parts. We made a deal and said, you know what, Rolls-Royce engines can come into America tariff-free and get put on Boeing jets. That's perfectly fine. And what did they turn around and do? They turned around and announced they were going to buy $10 billion worth of Boeing jets on top of that. So this is the right kind of deal you want to do with a country, a friend, someone who's willing to open their markets. We help them. We're going to sell them beef, and they're going to buy less beef from other countries. So I think that's the way they balanced it. It's great for us. Remember, 5 billion of new opportunity to export and $6 billion of new tariff revenue into the United States of America. So that External Revenue Service, here we come. Here we come.
You know, on that point, we just had Joe Lavorgna on, and he's been calculating. You're running 45% ahead of last year on tariff revenues, right? Customs related revenues. The run rate is 125 billion, but it may be more than that as these deals are actually put into place. Now that's 125 billion is a nice piece of change. You get up to 175 billion or so. You know, we could cut some taxes on that. We could slash some deficits on that. You follow? I mean, I hear Howard Lutnick. I don't know why this is so hard to understand. Fair trade,
Well,
reciprocity,
exactly right.
making some money on this deal. I mean,
Because when you look at the underlying, like the economics of it, a lot of the actions are contradictory to each other. Okay, so at first it made a lot of sense. We're going to at first make money from the tariff revenue until these companies decide to move to America, in which case we're going to be making less tariff revenue, but the productivity boom and the amount of growth in the amount of jobs added to the economy, it'll make up for it. So at first you make money just taxing these countries, then eventually those companies move to America to avoid the tax. And so yes, you're going to be losing the tariff revenue, but hopefully you'll compensate for it in the GDP growth. But now there's, a lot of these things are starting to contradict each other, because if things are made here, prices are going to go up. That's going to be worse for consumers. Now, if everybody is spending and everyone has jobs here and the economy is booming, then prices will go up again because the demand is higher for the same amount of supplies. More demand chasing fewer goods. So then we kind of get to a point where we can't avoid the lower and the middle income class getting screwed by higher prices, way worse than what we're seeing now. So that's why it's contradictory. That's why, it all does sound good at first, like we're making everything fair and it's reciprocity, but we have to look at the end results of each one of these deals and be like, is this actually working out net positive for America or not?
fair trade itself, let's level the playing field. Wall Street goes crazy. Wall Street Journal goes crazy.
What's up, Walter?
Why this is so
How we doing,
hard to
brother?
understand, Howard. I know you. I listened to the president today. I watched you guys going back and forth. Why is this so hard? Why is this so hard to understand?
These guys, it's like the dark ages, Larry. They forgot how to do tariffs and fair trade. They think NAFTA, where you take the factory out of Michigan and Ohio and move it to Mexico.
Oh, who's he roasting? He better not be roasting me.
I don't know why this is so hard to understand, Howard. I know you. I listened to the president today. I watched you guys going back and forth. Why is this so hard? Why is this so hard to understand?
These guys, it's like the dark ages, Larry. They forgot how to do tariffs and fair trade. They think NAFTA, where you take the factory out of Michigan and Ohio and move it to Mexico, is a winning move. But that's not the winning move for GDP. We're going to cut the trade deficit. If we cut the trade deficit 25%, easy to do. That's 1 point GDP. You build a couple of trillion in factories, 2 points GDP. That's the president of the United States driving 3 points of GDP. And then, just like you said, if the average tariff rate for the world ends up being 15% on average, that's $450 billion a year. Now, Congress doesn't score that, because it's not their pen, it's the president's pen. But you know what's happening to our deficit, and you know what that's going to do to interest rates. It's going to drive them down, and we're going to deliver on Donald Trump's promise.
And look, folks are coming here to invest. I mean, president keeps talking about the buildup of investment. This is real. I mean, whatever the number is, 3 trillion, 4 trillion, I don't know. All I know is a big chunk of cash.
The truth is, I mean, all these oligarchs that I just told you guys, these dark pools of money that come in and really bid up the price of like large scale residential real estate and the rest, all it really does is just make things more expensive. And so like the house that was 17 million or whatever, that like some professional athlete would have bought is now 50 million. And it's like some Russian owns it and like Americans are getting stifled out. So that wasn't like an extreme example, obviously, but it's the same with farmland, with China, for example. Like talking about how these folks are going to come in and buy stuff really just makes everything more expensive. And not to say that American companies aren't doing the same. BlackRock bidding up residential real estate, like they're just as guilty. But I'd rather have American companies monopolizing, then they can get broken up and there's restitution, versus you have like Russian companies or Chinese companies that we can't really hold accountable for ripping off the American people. So I guess it is a little bit different. You know, the devil you know better than the devil you don't sort of deal.
Is coming to the United States. And a lot of American manufacturers are doubling up in the United States. And you're going to reward them in reconciliation with 100% expensing, including factories, which is fabulous. That gives them the incentives to build and expand in the United States. So again, I don't know. I still don't understand what's so hard to understand here, how good this is going to be. If you implement it, and I'm going to ask you in a minute, but this is pro-growth. You're going to have reindustrialization. I hate to use that word. It's a little hackneyed, but that's what's going to happen. Reindustrialization.
Well, yesterday I met with the three biggest pharmaceutical companies, and they said the 15% manufacturing tax rate eliminates their reason to have their businesses anywhere else. They're going to build it here. They said $150 billion, just those three companies, $150 billion committed to building pharmaceuticals in America. I mean, this is the kind of move that is going to change the way America works, changes the way America feels about itself, and it's going to drive our economy. It's exactly the way you're talking about it. The tax rate plus, you know, that 15%, the accelerated depreciation. The president understands business. He's talking to businessmen when he says that, and he's going to produce those kind of factory builds in America, and it's going to be impressive. And wait till you see the number coming out of the Middle East next week. If you think
All right, got a little bit of drawdown here. Now we have the second push down. So as soon as we fill this candle, that's where you can move your stops to break even. Let's kind of wait for this thing to play out. TP1 already got hit, and let's see what kind of price action we get from here.
president's exaggerating, wait till you hear the numbers coming out of next week. It's going to be wow.
Well, one thing, let's just talk about that for a minute. He mentioned today, almost as a throwaway, but he said, we're working on 3 more deals right now. I assume you're engaged in those deals, you and Jameson and whoever, Scott. So, but really, is that going to come out of the Far East? Is it going to come out of Asia, or is it going to come out of the Middle East? Give us a sense of where these next deals are coming from, and how fast can you do it, Howard? Can you keep the momentum growing?
Well, okay, we're focused on the big countries. Okay, top countries like the UK was not.
Sheesh, now that's a drop. All right, stops get moved to break even. Partial profits get booked again. Okay, beautiful. Then hold the rest. And then as the market continues to break levels, we can trail the stops all the way down.
Number 6. So we want to do a big country from Asia for sure, because we want to be geographic. We want to show people the structure of how it can done. We like the template idea. We like the form that people understand it, because it'll move the other guys quicker. But remember, giant countries, I don't want to go fast. I want to do it correctly. The president doesn't want to go fast.
Beautiful drop. Can you guys let me know who's in this trade? Members, who's in this trade, or who closed already, or who just is sitting out today? Let me know where you guys are sitting on that bench.
Fast. He wants to do the kind of deal we did today, where we said, look, this is just a win for America, and we figured out how to make it a win for them. So it's going to take a little more time than you think. But we could do a good deal tomorrow. But the question is, when are we going to do the best deal? And I think, like you saw, the president said today, last night, he took my deal and he made it better. Last night, he took my deal and make it better. So I always let the best deal maker in the world make the deal. You know, I'm a smart guy. I work for Donald Trump. I'm going to let him be the closer every time.
Well, he's a good closer. You can create a deal, as I understand the British deal. You've got some important points, as you've outlined, the president outlined today. But
Christine Jensen, isn't it crazy the day that we don't trade? Like, look how many of these trades. Look at this 88.6 earlier, 88.6 before and after. All right, then we had the buys, Model 1 buys, 88.6 on the 5-minute time frame. And then we had the 88.6 sells. right? Right off that. And then now we're kind of playing off the retest of that. It's so many. And just the days that I don't trade, everything just kind of plays out. But that's the choices we make.
It can grow.
It's not about when it's easy to follow your rules. It's like, oh, I stayed out the markets and it went against me. Like, yeah, good thing I stayed out. It's not when it counts. It counts when you follow your rules and the market is like, it's like you would have won all the trades, but you're following your rules. That's where it really counts to be disciplined, because that's when it's hard.
Grow. The British Prime Minister said it can grow. And I think that's very important. And I just wondered, is that itself a template approach to these other deals? You don't have to have everything exact. You know what you have, you know what the specifics are, but it can grow into something larger. Might make it easier to make these deals. I mean, am I reading you right on this, that this is the approach it's going to take?
Yes, it's exactly right. We're going to get the deals. So we're going to bring, let's say it's a country with a 25% tariff.
Mhm.
They open up a lot of their lines. They give us, let's say, $20 billion in
Mhm.
opportunity or $25 billion in opportunity. We cut them to 15. And they say, look, we want to get to 10. We said, then you've got to open more things, or we've got to do this over here, or you got to invest in us. We'll lay out the way that they can get their tariff rate down, which is all good for the math of America. I mean, this is Donald Trump at his best, creating the opportunity for someone like me to go out and make the deals that are the best for America.
Right.
And, we've got the cards, the way Donald Trump says it, we've got the cards, and we're going to play them incredibly, incredibly well.
All right, terrific. Good luck on all the negotiations. Commerce Secretary Howard Lutnick, thanks for joining us again, Howard.
Thank you, Chairman.
So just for context on this, Kash Patel, he's the current FBI director appointed under Trump. And there's a lot of, like, basically when you go against guilty people, especially if they thought they were going to get away with it for life, they tend to have like an allergic reaction, same way they're doing to Elon. And so Kash Patel's been getting a lot of pushback for some reason for just literally trying to make the FBI better. So he gets up in front of the House Judiciary Committee, if I'm not mistaken. What is this? Representative Madeline Dean. So yeah, the House Director, Pennsylvania, said he likely committed perjury. All right, let's see. They had a clash here. I've been seeing this all over the place. I think they were trying to either bury this or this is a distraction, but I think they were trying to bury this with a bunch of other news.
Rogers, Ranking Member Meng, Chairman Cole, Ranking Member DeLauro. And thank you, Mr. Patel.
I saw Kristi Noem's testimony. That was embarrassing. That was just horrible on her part, honestly. But Kash Patel did great. So I watched a few clips. Let's see what we got here.
For your testimony and for being here today. I've been looking at the president's 120-word FBI budget request, the so-called skinny, I'll call it Ozempic request, that states,
like, just automatically, what the fuck kind of question is that? We call it the Ozempic. But speak like an adult.
that, quote, the undoing of the weaponization of the FBI is one of the administration's top priorities. The weaponization of the FBI that is something that deeply concerns me. It should concern all of us.
She's so concerned that she has to read this word for word that her staffers wrote for her.
And yet, since taking office, President Trump has been on a revenge tour. He has targeted individuals, universities, law firms, with executive orders to cut them out or to make them come under his will. He has used ICE to disappear U.S. citizens without due process. And he's fully ignored a unanimous Supreme Court order. And then over the weekend, wasn't sure if he was obligated to uphold the Constitution of the United States. In your book, your recent book, Government Gangsters, you include an appendix with a list of names that people have referred to as an enemies list. Now, I know you will claim it's just an appendix, not an enemies list. So let's focus on how the president sees it, on what the president calls it. And you proudly display his quote on the front cover of your book. The president calls this a brilliant roadmap, a blueprint. And I have not even raised your storied children's book, The Plot Against the King. It concerns me how many people from this blueprint have been targeted with executive orders and FBI investigations. The FBI kept.
This is a quick reminder, everybody. If you guys want to get the Chart Addicts Daily Market Briefing, where we have all the biggest headlines, not just Forex Factory, but Also, which stocks are going to have earnings releases, what's the results of those, geopolitical, macro, and some of the key instruments to watch out for based on this news. It's going to be on our website every single day and in the email. So just go to our website link in the description, sign up for the subscriber list, and you guys will get this every single morning. All right, don't miss out. Be first. Click the link.
Cannot be weaponized. And under your leadership, it has been nothing but a weapon alongside the president to go after the president's perceived opponents, to stifle dissent and free speech. A few weeks ago, as we saw through a social media post that you quickly deleted, the FBI arrested a judge in Wisconsin for correctly asking ICE officials if they had a judicial warrant instead of an administrative warrant, which they did not have. Despite this judge following the law, on the morning of April the 25th, the FBI arrested the judge in an escalation of the weaponization of the FBI under your leadership. Let me be clear. A functioning democracy does not lock up judges. I am gravely concerned about the utter lack of independence of the FBI and its weaponization under your leadership. I am concerned that the president is using this book, your book, as a blueprint, as he has said. It's a blueprint for revenge. And I am concerned that your eagerness, a childlike giddiness to carry out the president's revenge tour, you've shown yourself to be unserious in your statements before you were sworn in and some after. You've shown yourself unfit to lead this important agency. I was an impeachment manager for President Trump's second impeachment. It was a sad, solemn duty. And so I wanted to ask you about that. Mr. Patel, as you and the president continue to weaponize and investigate his perceived enemies.
We're getting close to that TP2. That's going to be that taking partial. You can probably take partial profits now and trail the stops, but obviously do your own decision making and do your own analysis based on your rules and your trading plan. But that's just going to be the second target for me personally. Yeah, so far so good. I think this is trade well done. I think it has a lot of room to the downside, but there's only one way to tell is if it breaks that TP2 or not. If it breaks the TP2 and we close below, it's a pretty good shot that we continue to the downside. If we can't seem to break below that TP2, then it's just going to sit around and consolidate for a good bit here.
As you follow this blueprint, when can I, a former impeachment manager, expect the FBI at my door?
Ma'am, you want to know who was targeted by a weaponized FBI? Me. You want to know how and why?
Well,
You
may
want to know what I'm
write
doing
a
to
book
fix it?
about that. Let me move on.
Well, you should read the
Time.
book because there's no enemies list on that book.
So
There are
you-
people that violated their constitutional obligations and their duties to the American people.
That's good. You
And they
gave
were
them
rightly
purpose.
called out.
I'm
And
changing
you should give
topics.
that book to every one of your constituents so they can
changing
read
topics.
about it.
I won't be doing that.
That's their loss.
During your Senate confirmation hearings, you repeatedly denied having any involvement as a private citizen in the firing of FBI officials who engaged in the prosecution against January 6th insurrectionists, the violent rioters who beat and killed Capitol police officers and whom you referred to as political prisoners. Since then, multiple whistleblowers have come forward and we know that you likely committed perjury. At the same hearing, you claimed you were not familiar with Stu Peters.
No, she just accused the FBI director of committing perjury. Now, inside the halls of Congress, you actually can't, you can't get in trouble for defamation and defamatory statements and things that are lies. It's protected under the legislative immunity, I think, or like the speech and debate clause in Congress, which allows you to deliberate a bunch of shit and in turn basically lie. But then what happened was, I think Kash Patel was suing another congresswoman because after the hearing, she went out to the TV cameras or on Twitter and reiterated the same lies. Now, outside the halls of Congress, there's no legislative immunity. And so you guys will hear he kind of throws a dig at her in a little bit, tells her if she wants to take this outside, the TV cameras are outside. That way, if she feels like what she's saying is true, then she shouldn't have a problem saying it to the cameras, but she won't, because then she can actually get sued for defamation for lying. But in here, she can just lie as much as she wants. It's a stupid system.
An anti-Semitic Holocaust denier,
Oh, whoa.
despite the fact that you appeared on Mr. Peters' podcast.
Yo, how about that? Yo, chat, is Kanye West wildin'? Yo, chat, is Kanye West onto something or is he wildin'?
8 separate times. 8 times. and you claimed not to recall. Mr. Patel, my second question is, should we worry more about your memory or your veracity?
We should
Oh,
worry more about your lack of candor.
yo, son, no. He's about to tear her up, bro. I gotta get my popcorn for this. He's about to tear her up.
Should we worry more about your memory or your veracity?
We should worry more about your lack of candor. You're accusing me of committing perjury. Tell the American people how I broke the law and committed a felony. Have the audacity to actually put the facts
All right, then
forward
the answer is
instead of
no.
lying for political ban.
Now that he's out the hearings, now that he's the FBI director, well, you better show some respect to Director Patel.
So you can have a 20-second
answer is-
donation hit.
The answer is both. I believe that the
Lying for
You do- memory or your veracity.
We should worry more about your lack of candor. You're accusing me of committing perjury. Tell the American people how I broke the law and committed a felony. Have the audacity to actually put the facts
All right, then
forward
the answer is
instead of
no.
lying for political banter. So you can have a 20-second
answer
donation hit.
The answer is both. I believe that
The answer is you're failing, not me.
My time.
Go ahead.
Yo, that's when somebody tries to pull one over on you and they're like, all right, well, I'm speaking now. And then you're just like, all right, you go ahead. You basically are giving them permission on their own time. And she's reading off the paper. She's not ready for this back and forth. Her staffers did not prepare her at all for this. Like, she knew she was going to get the TV. She did not expect the guest to actually, step up and say something, but it's a new wave, people. It's a new regime. Adults are back in charge. Kind of.
Mr. Patel, I believe that the members of the FBI, and I know many of them, many retired, 38,000 people, as you say, it's a little less than that now, deserve the very best, deserve extraordinary independence, deserve freedom from the fears of being investigated, the freedom of coming forward to make sure they're doing their job. And I'll end with this, that I think it's interesting that in your proposal today, you find yourself at a gulf of difference between you and the president. I wonder how you will resolve that. Will you go to the president and say, we need 11.2 billion, not what you cut out of here? You're asking for more than $1 billion than the president's request. Are you going to go to the president and straighten out that gulf?
I'll do what I've always done and represent the American people, defend this country, and make sure the Constitution is always upheld and the FBI is never weaponized. Maybe you should do the same.
Woo!
So you agree with the president when he says he doesn't know if he should uphold his constitutional duty?
If you want to just keep putting words in my mouth, the TV cameras are outside.
I thank you. I yield back. Again, this is an unserious moment, sadly, for the FBI. I yield back.
More so for you.
Yo, son. But put W cash in the chat. But the corruption is being met face to face. 29 minutes ago, the NEC director, Kevin Hassett, briefed on about 24 other deals that are close to being resolved. Let's see what we got here.
The United States and China set for
NEC, what is that? The National Economic Coordinator? NEC. This can't be it. NEC director, National Economic Council, of course. National Economic Council. Let's see if this is a government agency or what is this? It was established in 93 to advise presidents on U.S. and global economic policy, resides in the Office of Policy Development as part of the Executive Office of the President. So it's an agency of the executive branch, just like everything else is. The NEC has 4 principal functions: coordinate policymaking for domestic and international economic issues, coordinate economic policy advice for the president, ensure policy decisions and programs are consistent with the president's economic goals, and to monitor implementation of the president's economic policy agenda. So I guess this is the implementation arm of the president's agenda. They're the guys that go out there and actually enforce all of the decisions that are being made. So pretty cool. All right, let's see what the NEC, I don't even know I've really have very little knowledge about the NEC. I know a little bit about Kevin Hassett, but let's see what he's got to say.
For preliminary trade talks tomorrow in Switzerland. Joining us right now to discuss it and much more is White House National Economic Council Director Kevin Hassett. Kevin, thank you for being here today. Let's talk through what we've heard from this framework, first of all, from the deal with the United Kingdom, on how you think this is going to impact the economy. Obviously, not one of our largest trading partners, but this perhaps provides a framework for what we might.
And just for reference, the size of the US economy is about 23 trillion-ish, 24 trillion total gross domestic production every year. The European Union's about 17 trillion. So they're behind the US, but they're still a pretty sizable trade partner. The UK, I think, is less than 4 trillion. So EU is about 17 trillion. UK, call it about 3.8 trillion. All right, just so you guys know, like they were the first and we were really happy about it, but they're one of the smallest trade partners that we have. So on the grand scheme of things, it's more of just like that warm up.
Anticipate to see in some other trade deals as well. What are the key points here that you see?
Yeah, I think it absolutely is a framework for the deals that we're going to see ahead. It's got a 10% rate that's kind of a ring around the country with respect to UK goods, but with respectful exceptions like the quotas for autos. And I think in our view, that makes it so there's a lot more revenue coming in that the US can use to make American workers and American firms more competitive. And the other thing is that we put a high priority on advantaging American farmers. And so if you look at this deal, go look at the press release that the beef producers put out as soon as the deal was signed. We know that it's been a tough time for farmers in the US. And a big reason is that they've been treated so poorly by our trading partners. And getting the UK, which has been a country that's been pretty reluctant to let our beef and other products in, come to the table and open up their markets to US farmers is a big, big win.
We did hear, though, from the policymaking group for the United States automakers that they were disappointed by this news, to hear that UK autos that are made in the UK and maybe have zero parts that are made in the United States can come in and get a better deal than those that are compliant with USMCA and maybe contain half of their parts from US autos having a much higher tariff rate. How do you address that?
Yeah, well, there's 100% way to address.
Oh, Squawk Box questions are getting better. That was a solid question from start to finish. And I'm really excited to see what he says. I have my own answer on this, but let's hear her question again, because this was a really, really well thought out question. Whoever is in the writer's room, CNBC is stepping up their game for sure. Bloomberg needs to get
Open up their markets to US farmers is a big, big win.
We did hear, though, from the policymaking group for the United States automakers that they were disappointed by this news, to hear that UK autos that are made in the UK and maybe have zero parts that are made in the United States can come in and get a better deal than those that are compliant with USMCA and maybe contain half of their parts from US autos having a much higher tariff rate. How do you address that?
Yeah, well, there's 100% way to address any divergence in these things, and that's to make sure that the parts are more made in the U.S. And so onshoring of production has been a key objective of President Trump's. If you look at the jobs data and the capital spending data in the first quarter, where we saw a 20% boom in equipment investment, you can see that it's working. But yes, there's going to be some adjustment. That's the purpose of the policy.
The cars that are made in the UK can come in without any parts made in the country with a lower tariff.
That would be a bigger concern on an economic front if there weren't a cap on how many cars were coming in. So it's just capped at about what was coming in before, so that U.S. producers don't have to worry that they're suddenly going to lose their market compared to what's been happening in the past.
What impact will this have on the?
So he didn't actually say that Americans are going to be paying the same tariff rates or the same prices that the UK. He's still saying that the UK car manufacturers are going to get preferential treatment, which is kind of fucked up, because like we're claiming this as a win for us, but like they're getting the better end of the deal. Now, truthfully, which cars are mostly made in the UK? We're talking Bentley, Rolls-Royce, and Jaguar. And so, there is already a limit to luxury vehicles that can come in, but still, it's just a bad message to send when folks that don't have a single product made in the United States or anywhere in the USMCA, which is US, Mexico, Canada, where some of the parts are made or some of the cars are assembled. and they're getting preferential treatment, that's not really America first. And so again, another sign that like the explanations for these actions don't really align with like what the stated goals of the administration are. It's just starting to piss me off a little bit.
The greater US economy to have a trade deal like this in place?
I think it's going to be enormous positive because now people see what the next deals are going to look like. And, you know, congrats to Secretary Lutnick and Jameson Greer, who are leading this effort. And I can tell you that I've been briefed on about 24 other deals that are this close to being resolved. And what that's going to do is it's going to be very settling for markets because they're going to understand what the rules are. They're going to see that the rules advantage American producers and American workers and aren't horribly disruptive for like some of the Wall Street firms have been saying they would be if you look back a month or two.
Kevin, how much money should the Treasury expect to be bringing in annually as a function of tariffs once these deals are remedied or negotiated?
You know, the problem with that question is a really smart question. And the problem with that question is it depends on what happens with the negotiations.
Next time, Andrew, let them finish asking the question in your earpiece before you try to get it out.
It depends what happens with the negotiations with the Chinese in Geneva this weekend. And so if I put a number out, then in some sense, it's upending the negotiation because we're saying, oh, well, that's what the U.S. position is. I can say that I spoke as they were getting on the plane with Jameson and Secretary Bessent last night, wishing them Godspeed. And, you know, everything that's been going on with the meeting in Switzerland is very promising to us. We're seeing extreme respect treating both sides with respect. We're seeing collegiality and also sketches of positive developments. And so I think that as
collegiality, is that a word? Does he mean congeniality? Why is he smiling so hard, man? What the hell are you so happy about, bro?
we move forward and remove hopefully uncertainty.
I don't know, man. I kind of trust him with economics. This is kind of my first. Obviously, I'm judging books by their cover today.
On China and get deals like
Yeah.
the UK, then people understand what President Trump's trade policy has been all about, and then we can move on to the thing that I've been working hardest on. I was just in the Roosevelt Room with the Speaker of the House and the Majority Leader and Scott this week negotiating the tax bill, which is going to be the biggest tax cut ever. So there's a lot of positive stuff going on.
Can you also speak to just what I imagine are these favored nation clauses that are being put into these contracts or agreements around tariffs, meaning that the UK obviously wants certain things. Others, you're going to have India, I imagine, to the extent they want to do a deal with the US, they're going to want to have better terms than China can get. How is that all going to work?
Well, I think that in the end, there's going to be a lot of similarity between the people that come to the table, make the concessions that the president wants, and then agree to be treated well as the UK is being treated well right now. You know, I think that what every country comes to the table with is a list of the things that they care the most about. And as I look at all the negotiations and how they're progressing, the one thing I can say is that that's a much harder thing for the EU to do than for everybody else. That's why we're moving so fast with so many countries, because at the EU, you got lots of different countries, and the countries disagree amongst themselves about what the priorities would be. But yeah, I'm very confident that in the end, there's going to be very similar treatment, but on different things, because different countries care about different things.
I think if we were smart, and we do have the capacity for this, is to treat every country in the EU individually and to kind of look at their overall productive capacity. Some countries aren't producing shit that we need, and so they really shouldn't be roped in with the same preferential deals as, let's say, Germany. But Germany, being the largest economy in the EU, basically runs the show. And so they're dragging the EU to whatever benefits them the most, which is mostly car manufacturing. We got Volkswagens, we got BMWs, we got Mercedes. There's tons of cars coming out of Germany. And so as the largest economy and the head of the EU, I think that they're screwing over all the small countries in order to basically be selfish. And so they wouldn't agree to this because obviously as a union, they want to be roped into the same deal. And so like the weak countries kind of think they're getting a good deal because they just get to ride on the back of Germany. And Germany thinks that they're just like putting all the risk on the small countries and kind of taking the benefit. But in reality, America doesn't benefit at all from that model. Like, okay, we need cheese and champagne and wine from France, and we need cars from Germany. Let's go through these sectors individually, and let's make sure that we're actually getting our fair share, because the EU will try and finesse. They'll try to like build this negotiation deal to fit them the best. and there's too many moving parts for us to check. So I think if we treated those moving parts individually, it'll be way more effective, way more accurate, and America would get the best outcome. But of course, that's not going to happen. We got a big showdown this weekend, people. Don't forget, I'm not talking about Bilal Muhammad versus JDM. I'm talking about China and the US in Switzerland for the beginning of these negotiations on Saturday. So that's going to be a big topic. Obviously, it's smart for them to do it over the weekends. Markets are closed. And so expect a massive gap on Sunday with all the over the weekend trading and all the post-session trading going on between some of the insiders. I think that we're going to see price open at a completely different area than where it closes. So that's obviously something to keep in mind for this weekend. Okay, let's listen to the rest of this. We got another 3-4 minutes, and then we'll call it a day here for the stream. I told you guys I'm not trading today. Markets are being exceptionally slow. So, I'll kind of just reiterate the levels at the very end, but really not much going on here.
But Kevin, you said that you don't think these trade deals the tariffs are going to be as disruptive as a lot of Wall Street firms have predicted.
Correct.
Is that because you think that these tariffs are going to come down dramatically as trade deals are cleared in rapid fire?
Well, we'll see what happens, but I think the UK success happening so fast is a model of what everybody's shooting for. And the fact that even before Liberation Day, at the beginning of the year, negotiations were already ongoing with Jameson Greer and Howard Lutnick. And so there's a lot of progress made. And yeah, I think you're going to see a lot more deals like the UK deal in the coming weeks.
We're quoting you that these trade deals won't be as disruptive as some people, but I think you said and at least meant that the tariffs won't be as disruptive. The trade deals, I think everyone agrees, would be helpful if it brings down the high tariffs that had been proposed on April 2nd.
Well, it's really the non-tariff barrier, the huge positive shock of getting rid of these non-tariff barriers. That's the thing that I think is why markets are celebrating this deal, even though there's a 10% tariff.
Oh, let me make a prediction for you guys. This word or this phrase of non-tariff or non-tariff barriers, this is going to be like the number one excuse for the administration if any trade deal doesn't work. They're going to be like, well, it wasn't the trade deal or the tariffs themselves. It was these non-trade barriers. So whether it was legislative or whether it was regulatory or whether it was geopolitical, like the government is doing something to stop us from actually getting the most out of this deal. And so China locking out the world from their markets, that's an example of a non-trade or non-tariff trade barrier. Because it's not like we can just drop our tariff rates and all of a sudden now it's fixed. There's got to be some political will and incentive there. And so this is I think this is going to be a huge, huge phrase that's being used. So you guys should become familiar with this. And I think it's going to be used as an excuse also whenever something doesn't work out. Pretty interesting stuff. The more I hear it, the more I'm realizing, oh shit, this is the biggest cop-out of all time. It wasn't us, it was the North Koreans.
Let's talk a little bit about taxes and where you think the progress is being made with that. We did just have Senate Majority Leader John Thune on set talking about some of these things. One of the things he pointed out is that he's dealing with different math in the Senate than the House Speaker is in the House, and that it's a little complicated to work the math because each of those bodies has something slightly different that they'd like to see.
Right.
The leader himself said that, look, he'd prefer to see all these tax cuts that exist right now made permanent rather than maybe taking on some of the new promises that President Trump was laying out on the campaign trail. How do you score all of these different things for the economy?
Well, first, it's going to score to be a big, big positive for the economy, a much bigger positive for the economy even than the Tax Cuts and Jobs Act of 2017. But the way to think about what's going on is that it's really easy to understand, but in some sense, there are moving pieces. The reason it's easy to understand is that the president said throughout the campaign what his high priorities are for taxes, like no tax on tips, no tax on overtime, and so on. Interest-free auto loans.
Those interest-free auto loans. I did not hear that on the campaign trail. What the hell did he just say? That doesn't even make sense. Okay, anyways, the three kind of big things that Trump said that was kind of supposed to help the middle class and the lower class the most. No tax on tips. That's huge. Now you can work however much you want, and then that money is yours. You're working your ass off for it. Now, no tax on overtime. So you got to support a family. You're picking up extra hours, picking up extra shifts. Those are non-taxed, and you're getting paid sometimes double or 1.5 times your salary. So you're already getting paid a bag for overtime, and now it's non-taxed. You're getting the full check. That's crazy. Imagine how much more productive people are going to be. I'm picking up an extra shift somewhere, right? And then the third one is no tax on Social Security. There's some elderly folks in this country trying to live on $15,000 a year, and just it's not cutting it. And so what we got to do is if we can remove the taxes on Social Security, that's going to enable those folks to have way less stress, way more money in their pocket, and we don't have to subsidize the difference. Whenever you put a sector of your population in such a bad spot that everyone has to now chip in to solve the issue, it's always more expensive than just making sure that issue doesn't come up, right? So I think that's going to be a big deal. We can't really pay them more in Social Security because we've depleted the fund. So how do we make sure the elderly get their fair share without paying them more or printing more money? It's really just remove the tax on it, and now they get to keep a bigger chunk, and wow, problem solved. And now they're going to go spend this money. They're not really, you don't really see too many retirees doing international travel as much as you see domestic travel. That money will get circulated here. Airlines and cruises and just everything, right? Okay, so ladies and gentlemen, wow, right as I'm about to hop off, the trade is playing out. Let's just hang out here so I can talk my shit after it plays out. We'll just hang out here 5 minutes. Just hit the I told you so, then we can just call it a Friday.
Those things are his priorities. Those are the things that he insists are going to be in the bill. And then the House and the Senate, they have some of their priorities are different, and they're working it out amongst themselves. And President Trump is clear that he has some things that absolutely red line have to be in the bill. And he also understands that in the end, as they work it out, there'll be things that one side or the other forces the other to do that not everybody agrees about, that won't necessarily be in the top 10 list of the president's priorities. But that's very collegially being discussed in the Roosevelt Room and up on the Hill with Scott Bessent, me, and the leader and the speaker. And we're meeting almost every week right now to make sure that it works out.
Yeah, I got a feeling this thing's gonna drop right through the zone right about now. We'll see. It might be this candle or the next one, but it's looking pretty good now.
A great meeting this week with an incredible amount of progress moving forward. I expect that you're going to hear from Jason Smith sometime today of what the schedule for the tax bill will be, and it'll probably be really, really accelerated given what I'm hearing.
You think the rate's going back to 39.6, Kevin, to make room for some of the other provisions from the president? The president said he'd be okay with it, but he's not. He was kind of like, sounded like
he's not thrilled. He's not thrilled about it. He understands the argument. It's one of the things that the Senate and the House has to work out. I think I saw what Senator Thune was saying on your show, and he felt like there might be some scenario where he would consider that, but no, it's not high on the president's list. He even tweeted about it this morning again.
The president also on Truth Social just said many trade deals are in the hopper. All of them, there it is. All of them good or even great ones. So he's
it's true.
Okay, you might be listening.
I've seen him. It really is true. Yeah.
Okay, you might have been listening.
Okay. As much as I want to stay, I got a pretty busy day ahead of me, so I'm going to have to hop off. But it's probably the worst time to hop off because this thing's about to just tank. But you guys have got a pretty long memory. So when I call a trade, don't just forget about it after we hop off this stream. You guys can obviously track this on your own trading views or your own trading platform or broker, whatever you're trading on. Learn something. Even if you're not live trading like I did today, at least you can paper trade or sim trade and actually take away something, for God's sakes. And when you don't have money on the line, you're way more clear-headed, so you can just observe this way more simply. Like it's not like this whole analytical thing that you're trying to do. It's as simple as just watching it. It's hitting all your levels. It's respecting these zones. You get to learn what it looks like when it's breaking, what it looks like when it's rejecting. And all of a sudden, next week, you become way more effective. All right, so study up. Hopefully, you guys learned something from today's stream. Make sure to register for the NASDAQ Masterclass. Link is in the description. Use promo code ChartAddicts for 50% off. And also, make sure to subscribe to the email list so you guys can get the Chart Addicts daily market briefing every morning, where we break down not just the Forex Factory kind of data releases, but also all the major factors that are impacting markets, such as geopolitical, macro factors, and we give out a watch list of some instruments that are going to be mostly affected. Make sure to click the link in the description. Be first and win, people. All right, TP2 just got hit. Everybody, have a great Friday. Walk away from the charts. That's all I got. Peace. All right, members. Yeah, banger. Better late than never. Patience.